Hey everyone, welcome back to Advanced Accounting. In this class, we're going to continue to talk about how to do consolidation when the parent has less than 100% ownership of the subsidiary. So in last class, we talked about what to do on the parent book and what to do on the consolidation worksheet when the parent is using the equity method and when it has less than 100% ownership of the subsidiary. We also talked about how to allocate the consolidated net income between controlling and non-controlling interest on the consolidation worksheet. And in this class, we're going to first talk about how to calculate total goodwill and how to allocate total goodwill between controlling and non-controlling interest when there is non-controlling interest. Specifically, this is related to your consolidation entry A2. And then after that, we're going to talk about what if the parent is using the initial value method and what if the parent is using the partial equity method. So first, let's look at how to calculate total goodwill and how to allocate total goodwill between controlling and non-controlling interest. Let's start from how to calculate total goodwill when in the presence of non-controlling interest. So if you still remember from the previous class, all of the previous situations we talked about, those are the situations when the parent has 100% ownership of the subsidiary. And in that situation, when we talk about what is goodwill, goodwill is the consideration transferred by the parent minus the fair value of the net identifiable asset of the subsidiary, or the fair value of net identifiable asset of the subsidiary. So this is goodwill, what goodwill is. In the situation that the parent has 100% ownership of the subsidiary. And now the parent paid some consideration transferred either in terms of cash or stocks, and it is only obtaining, for example, 80% of the subsidiary. And how do I identify the total goodwill in this situation? So here, instead of the consideration transferred, here, because now the parent is paying, is buying less than 100% of the subsidiary. So the total goodwill is actually the difference between total acquired from fair value and the fair value of net identifiable asset. So if the total acquired from fair value is more than the fair value of the net identifiable asset of the acquiree, the difference is goodwill. And in some, in few situations that we may say the total acquired from fair value. So when the parent is paying less, the total acquired from fair value may be less than the fair value of the net identifiable asset of the acquiree. Then the difference is called gain or bargain purchase. So here the keyword and the concept which is new here is total acquired from fair value. So what is this? What is the total acquired from fair value? The total acquired from fair value is basically, it is consideration transferred by the parent. So whatever the parent is paying to obtain, for example, 80% of the subsidiary, plus fair value of the non-controlling interest. So which is, what is the fair value of the other 20%? The sum of these two, that is the total acquired from fair value. And then the fair value of net identifiable asset, that is basically you identify everything you can identify with the firm, and then you add up the fair value of those. So this is when the parent has less than 100% ownership of the subsidiary. So here, I guess what is new here is we, instead of using the consideration transferred, we need to add the fair value of the non-controlling interest here, because the consideration transferred by the parent is only to buy a portion of the sub. And here we need to calculate the total goodwill, which is based on 100%. So we need to add the fair value of non-controlling interest as well. And then, so in this formula here, fair value of plus the fair value of non-controlling interest. One thing we need to spend more time on explaining is how to calculate, how do we determine the fair value of the non-controlling interest. So usually if there's a market for that the shares of the subsidiaries actively traded on market, we just take the market trading price for the non-controlling interest. However, in some situations that the subsidiaries shares is not actively traded, and in that situation, if we make the assumption there's no control premium, then we can just calculate the fair value of the non-controlling interest in proportion to how much the parent is paying. And then what is control premium? Control premium is basically the premium paid by the parent to obtain a controlling interest. So for example, if the share, if for example, the share is traded at $60 and the parent is willing to pay $70 to obtain a controlling interest in the firm, then the difference, the $10 difference is a control premium. So here in the situation that the shares are not actively traded, and we need to figure out what is the value of those non-controlling interest. If in addition, we make the assumption that there's no control premium, meaning that the parent is not paying more to obtain the a controlling interest in the firm, then we can estimate the value of the non-controlling interest in proportion just to what the parent has paid to acquire the voting stocks of the firm. So this is how to determine the fair value of the non-controlling interest. And then let's look at two examples here. The first example is we have a Parker Corporation want to acquire 90% of Strong. Strong has 10,000 shares outstanding. Strong stock are trading for $60 per share. So this is actively traded. Strong stock has an actively trading market. Parker paid 70 per share to induce enough stockholders to sell. So in this situation, is there control premium or no control premium? Think about it. Yeah, right. So this is the situation when we have a control premium. How much is this control premium? So the parent is paying 70 for something which is actively traded for 60 per share, meaning that the parent, in order to obtain a controlling interest, the parent is paying more, and paying how much more? Paying $10 more. So this $10 is the control premium the parent is paying. And the total fair value of Strong's net identifiable asset is 600,000. What is the amount of total acquisition date fair value of Strong? And what is the amount of goodwill? So you can pause the video for now and please spend 5 minutes to work on this example. So what is the amount of total acquisition date fair value of Strong? The answer is 619,000. And what is the amount of goodwill? The answer is 90,000. How do we get those numbers? So first let's look at, Strong has 10,000 shares. Those are the total number of shares. And Parker obtained 90% of these 10,000 shares, which means that the Parker has 9,000 shares. So Parker, which is also the control interest. And the other non-controlling interest has 1,000 shares. So this is non-controlling interest. And Parker paid this 90% controlling interest. Those are obtained at $7 per share. And the non-controlling interest, the trading price is $60 per share. So those are the information given. And the total acquisition date fair value of Strong, that is basically the consideration transfer plus the fair value of Strong's non-controlling interest. And what is the consideration transferred? Consideration transferred is $7 per share, $70 per share multiplied by 9,000 shares. So this is what is paid by Parker. And what is the fair value of the non-controlling interest? So non-controlling interest is actively traded at $60 per share. And those are 1,000 shares. So total of those is 690,000. And this is the acquisition date fair value of Strong. And what is goodwill? So goodwill, as we said, goodwill is the difference between the fair value of the firm minus the fair value of the firm's net identifiable asset. So that is basically 690,000 minus 600,000, and that is 90,000. So this is the first example. When in the presence of a controlling interest, how do we calculate total goodwill? And then let's look at another example. In this example, Parker wants to acquire 90% of Strong. Strong has 10,000 shares outstanding. Parker paid 70 for the 9,000 shares of Strong. The remaining 1,000 non-controlling interests are not actively traded. So it doesn't have an active market. And there's compelling evidence that 90 acquisition price was not representative of all of Strong's 10,000 shares. So there's no compelling evidence. It is not representative, meaning that we can just view this $70 as representative of all of Strong's 10,000, the value of all of Strong's 10,000 shares. So Strong again has 10,000 shares. 90% is acquired by Parker, so that's 9,000, and the value is $70 each. The other 10,000 belongs to non-controlling interest. The other 10%, which is 1,000, belongs to non-controlling interest. And then the value, we can also say it as $70. And then the total value of Strong's net identifiable asset is 600,000. And we ask the same question here. What is the amount of total acquisition date fair value of Strong, and what is the amount of the total amount of goodwill? So here, this is an example of there's no control premium, because it says here there's no compelling evidence. 70 is not representative of all of Strong's 10,000 shares, meaning that there's no difference in the per share value between the controlling and non-controlling interest. In order to obtain a controlling interest, the parent is just paying what is the worth of those stocks. It is not paying more. So this is the situation of no control premium. Please spend 5 minutes trying to work on it on your own. You can pause your video for now. So how do we calculate the total acquisition date fair value of Strong? What is your answer? It is 700. Sorry. So it is 700,000. And the amount of goodwill, the answer is 100,000. How do we get those numbers? So the same as before, the formula doesn't change. The total acquisition date fair value of Strong, that is basically the consideration transferred plus the fair value of the non-controlling interest. So the consideration transferred is $7 per share multiplied by 9,000 shares. And the fair value of non-controlling interest is $70 per share multiplied by the other 1,000 shares. So the total acquisition date fair value of Strong comes up to 700,000. The amount of goodwill is basically the difference between the total acquired fair value of the firm. So there's a difference between the fair value of the firm and the fair value of its net identifiable asset. Fair value of the firm is how much is the total worth of the firm. Like it's the amount people are paying for the firm. And the fair value of all of its net identifiable asset is the sum of all of the assets you can identify with the firm. And you sum up the fair value of all of those net identifiable assets. That is the fair value of net identifiable asset of the firm. The difference between those two, that is goodwill. So the fair value of the firm is 700,000. And then we take out 600,000, which is the fair value of the firm's net identifiable asset. And that gives us 100,000 goodwill. So this is how to calculate total goodwill. And then we are going to talk about how to allocate total goodwill between controlling and non-controlling interest.